Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, with a broad market sell-off underway as investors de-risk their portfolios amid increasing economic uncertainty, Richard Weissman from Weissman Consulting has taken a look at the technical moves. The Nasdaq is in correction territory while the S&P 500 is approaching correction.
We are at a key level of support, which you can see on an intraday level. We keep breaking it. And then buyers do seem to be coming in so far. What I'll tell you is, probability-wise, having looked at these charts for almost 40 years, the more times that we test a certain level and break it intraday and then close above, the more likely people are to become very confident in selling that quote-unquote support level. It does seem like that's what's happening. And if we were to get a close below that 5,800 on the S&P 500 futures, we could be in for a much deeper correction and maybe even a down year for all of 2025. So it's a key level. As you can see, every day we keep testing it. But I don't particularly like the fact that we keep testing it day after day. I think that there's a weariness in dip buying as you continue to do that.
What if we see a sustained break below that level? What's the next level to consider, do you think?
Yeah, you can actually even see it on that chart. It's at around 5,500. But there's levels all the way down. This thing could get really serious, maybe even the round number of 5,000.
Well, oil prices have fallen to their lowest level in 6 months on fears that US tariffs will slow the global economy and slash energy demand. Donald Trump says he wants low oil prices and he appears to be getting his way. Here's what Richard Weissman is seeing on the chart.
This is one of those situations where he's getting his way, and it might not be for the reasons that he likes. It does seem to be another piece, potentially, of a risk-off, recessionary, weak economy scenario. So we talked about this last month, that crude oil seemed to be in a downtrend. There was some short-term reaction, but they never broke that downtrend line that I've called out on the chart there. You can see the support is roughly the bottom of the chart. So it's the 65 area, but for people that are really looking, with a microscope, it comes in at around $64 a barrel. I think the bad news for the bulls is below that, we could be seeing a much deeper bear move, and it kind of might line up with a weak U.S. economy or a weak global markets even, and less demand from the consumers for petroleum products, driving us down, again, not right away, but eventually to 50, and even an off chance of hitting $40 a barrel if we have a deeper recession than a lot of people are forecasting.
Gold is regarded as a safe haven, particularly in times of uncertainty. Well, that's playing out for the precious metal, with it remaining near record highs. However, Carly Garner from DeCarlyTrading.com sees warning signs ahead.
You can see there's a trend line, some technical resistance that comes in around 2950. Honestly, 3000 is kind of a psychological area, so I can't rule out a pump up to somewhere around 3000, maybe even a little above, but somewhere in this general ballpark, we start to get really top heavy. When I look at the RSI, you can see at the bottom of that chart, the RSI is the relative strength index. You can see that despite the fact that gold has made new highs on this last run, the RSI has not. And that's usually a sign that momentum is waning, despite the fact that prices are still accelerating higher. So it's kind of a warning flag to me that perhaps most of the buying is probably behind us, and we might run into a situation where we just simply run out of buyers and then prices start to fall back on themselves. Now, if we get below 2,800, that kind of gives the bears a bit of an edge. A normal pullback would put us around 2,600. So 2,600 is normal back and fill. It keeps us in a bull market. But if we break 2,600, honestly, I don't see anything stopping it until we get to about 2,150. And I think that would probably be a little scary for somebody that's holding gold here at these high levels.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.